Money FM 89.3, the best of Saturday mornings. Wide World on Money FM 89.3.
The idea of being a tech startup or any kind of startup in this part of the world is something that increasing numbers of people are into and have been doing for many years. Joining us today in the studio is Bill Padfield, co-founder of Salamander Advisory. He is a veteran of the tech industry who helps startups across Asia scale up, raise capital, and figure out how to put this all together. Today, we're going to talk to him about what's been happening under the hood of Southeast Asia's startup scene, where growth is coming from, and how global pressures are shaping the decisions of founders who are deciding to do their startups here or elsewhere. Bill Padfield, great to have you in the studio with us today.
Thanks, Glenn. Really appreciate the opportunity. Thank you.
Yeah, sorry about that. Got your mic on now.
Okay. Good morning. Thank you for the opportunity. I always get disturbed when you say veteran. I can't believe that I'm still in this industry.
You are a veteran.
How long have you been doing it?
40 plus years now, probably.
What, in Singapore? Or
No. 28 years in Singapore. But
well.
Starting when you were 10 years old. That's amazing.
I wish.
Yeah.
Bill, tell us broadly, what does the startup scene look like in Singapore right now? There are times when people say, "Oh, Hong Kong is the place to do startups," and then Indonesia tried to be a hub of that for a while, and with varying degrees of success. And Singapore is good in its own way, but it's an expensive destination for a startup to live in. What's it look like regionally?
Yeah, so if you look purely at the early stage in the VC space, there's about $6 billion of available funds here in Singapore, which represents about 2/3 of the whole of Southeast Asia, which shows you that Singapore is the place to get funding if you can. But your point earlier about it's an expensive destination is for sure. And the recent increase in rent for properties and so on has really impacted software developers who have been moving their resources offshore, which is really unfortunate because you've got some amazing talent here, but it's just the cost of the talent is not competitive to the rest of Southeast Asia.
Yeah. And it's not just that, is it? It's the cost of food, it's international schools, it's the cost of everything. Yeah. So it does have, Bill, a genuine knock-on effect in talent deciding where they're going to stay. Because the perception is it's Singapore, it's glitzy, it's where everybody wants to be.
Yeah, the hardest thing is, the money's out there, but it's raising the money. And then once you've got that money, maintaining your runway in particular so that you can actually get through the product creation or service creation and the different rounds of funding to survive. And, of course, you're burning cash all the way through that process. So being in an expensive destination is not really compatible. Now, market opportunities here, however, are sizable because you mentioned Hong Kong earlier. I used to run an SGX-listed tech company here in Singapore, and before IPO, there was a lot of discussion as to whether to go out on Hang Seng or to list on SGX. And in hindsight, interesting whether we should have picked Hong Kong or Singapore, but this was just prior to reunification in 97. So now I think a lot of companies here who are looking to raise money have funders in the region, which is great. But there's a lot of caution of what's happening in Europe, of course, with Mr. Putin starting his away game. In Europe, that meant interest rates skyrocketed. Financial markets are harder and harder to raise funding. Now, of course, Mr. Trump with his tariffs and various other things, it's causing a lot of uncertainty. So what happens? Funding starts to dry up pretty quickly. The LPs or limited partners that write checks to put into these funds are not writing checks. Why would you bother? You can get, 5, 6, 7% without any risk on your money right now. Why put it into a fund? And also the IPO market at the other end is not terribly exciting. So the whole process has slowed down significantly.
Slowed down, really. And I mean, global geopolitics has been right at the epicenter of a lot of that uncertainty, which leads to people not maybe making bold moves that they might have made.
Yeah, and it's a real shame because you've got some fantastic innovation out there. I mean, everybody's talking about Gen AI at the moment, but there's numerous other areas of tech. There always is. And whenever there are opportunities, it's a matter of whether you've got the talent, you've got the idea, you're very clear about the problem you're trying to solve, and then funding normally is available. And a lot of those companies today are really struggling. Those funds that are sitting on dry powder or cash ready to invest are being more cautious than ever before. Due diligence process used to last a couple of months. Now it's at least 6 months. That's financial due diligence, operational due diligence, and so on before they're even prepared to write a check. And we get approached very regularly saying, we need money, and by the way, we need it this month to meet payroll. And it's like, guys, you can't get money that fast. So it's really frustrating for these guys. And massive respect for these young scientists, young engineers. They've got really, really, big cojones, if I'm allowed to say that, to enable them to start this business in the first place. They've got fabulous ideas, but they just can't raise the funding. Tough.
Yeah. I want to talk to you about the ideas shortly, but let's stay with the funding for a moment. I mean, we're seeing right now as we sit here what's going on in the Middle East between Israel and Iran. Mr. Trump, you mentioned, how difficult is it? I mean, you mentioned there 3 months, 6 months, but you don't even know which way tariffs are going to go, whether they're going to go up, go down, get dropped. It must be a minefield.
It really is. And tariffs at the moment, as you've probably seen, are only on products. We haven't yet started to put tariffs on services or capital or anything else. So no idea what else he's got in his toolbox. So, and as you know, financial markets are very, very dependent on stability. And when there's instability, the risk index goes up, the stock markets go down. And as you saw, the US markets tanked again last night because of the activities in the Middle East. All this leads to uncertainty, which means people are not prepared to write checks. It's a wait-and-see atmosphere. So for those poor guys who've started their business, they're still running their business, burning cash, trying to get to the next stage of development, the next funding round. It's just getting tougher and tougher.
I mean, we're not going to make this a political podcast, but when they wait and see, I mean, the Trump administration, barring any unforeseen, it's 4 years. So are these folks going to wait for 4 years? Because we know this is going to be a roller coaster ride.
I mean, they'll be dead in a year or 9 months.
A lot of these
exactly.
A lot of these early stage companies just don't have the cash to last 4 years. The recommendation in the industry at the moment is to have about 24 months of cash, but that's an absolute luxury. The tech companies that I know quite well in this part of the world, very few of them are sitting on 24 months of cash. So they will have to do more funding rounds. Now, of course, you've got the influx of things like family offices now, which are starting to move into this space, single and multi-family offices, where the previous generation of families was more into more stable investments. You've got the new handover now to the younger family members who are starting to make investments in tech and things that they like. So all of a sudden they're turning up as potential investors. But, geopolitical situations puts a pause button on everything, unfortunately.
But let's flip that around for a second. Could it also be an advantage for Singapore? And I could be naive here. Because of the uncertainty around the world, at least if nothing else, you're guaranteed Singapore's stability. This very week, as I mentioned at the top of the show, I was at a delegation with the folks from Greater Manchester. They came over with the Mayor of Greater Manchester, Andy Burnham, series of business associates, to do just that, to invest, to set up, to try and get business partnerships going between Greater Manchester in the UK and Singapore here. And the number one thing that the Mayor of Manchester said, Andy Burnham, stability, stability, stability. So does that help in some ways?
From a funding point of view, there's no doubt. Hence why the majority of the VC capital is available here in Singapore other than the rest of the region. But unfortunately for foreign investors, what goes on in some of the other countries around here puts them everything into the same grab basket. So it's just become Southeast Asia. And for us who live and work here, of course, we understand that Singapore is an amazing environment. It's clean, it's professional, and if you want to have
connectivity,
and if you want a regional hub right now, it always used to be a consideration between Hong Kong and Singapore, and that's over. It's now Singapore. There's absolutely no question. So, but investors will say, look, Southeast Asia, there's some uncertainty, and there's been some headlines of companies who've raised money and had some fraudulent activities and so on in other countries. And of course, they paint the whole region with the same brush. So it does impact us. However, those people that want to get multinational quickly, Singapore is unquestionably the hub. You want access to funds, this is the place to be. And if you want access to resources post-funding, such as the ones that we offer, there's not much else in Southeast Asia. So it is a great place to be based, no question.
We're talking to Bill Padfield, co-founder of Salamander Advisory. And you talk, is it necessary for a startup to be based here to get money from backing here? Could they be in Malaysia where it's less expensive? Could they be somewhere else but still access the capital? Or in your world, is it just normal that you got to sort of be in the same town?
If the funds are here, depends on the investment thesis of the fund. Some of them will write checks across the whole of Southeast Asia. Some of them will write checks even wider than that. And I know some funds, even though they're based here, they've written checks in the US, Europe, wherever. But it all depends on how compelling your solution is to a problem. And one of the first questions that any investor is going to ask is what problem you're trying to solve. You know, and if it's absolutely crystal clear, and you really have a team behind it that maybe have done it before, or they've got fantastic tech skills or business skills, getting funded is still likely. But it just takes a lot longer than it did before. And whether you're in Singapore or KL or in Jakarta or wherever is almost irrelevant. The only thing that's different is in Singapore, startups here tend to look internationally very quickly because they know that it's a small market. I can't grow my business unless I grow internationally. Whereas companies that's starting in places like Indonesia may grow for a domestic market rather than internationally. So there is a difference, and it depends what your fund is trying to achieve with it, and the types of companies you want to talk to.
Who are the winners right now? Who are doing all, besides Gen AI? We know that's huge, but medical, insurtech, I mean, there's so many other facets.
Yeah, very much so.
Edutech. Who's winning right now?
Obviously, fintech's not going away, and there is a significant number of fintech startups in this part of the world. Edutech is another area, and medtech, as you've mentioned, or anything to do with healthcare, is doing particularly well. You've still got basics like communications technologies and other areas like data center, anything that's around that AI infrastructure, such as higher speed communications, heating, cooling for data centers, power in particular. And the big constraint for AI, of course, is you can build data centers, but can you provide the power? And this is a big problem from the US downwards. You know, how do we provide power across aging infrastructure at the speed that we need to develop these large language models?
Well, you've half answered this. I was going to ask you, you mentioned earlier, a lot of great ideas you're seeing from young tech guys, young scientists. What are some of these ideas that are coming across the table that maybe are getting the funding, are getting the green light?
Yeah, so over the 28 years I've been here, I've seen this region, in particular Singapore, move from taking Western innovation and taking it to market. And then the stage came next was incremental innovation, where we're actually going to take something and change it for the local markets or improve it, modify it, whatever. Now it's pure grassroots innovation, genuine innovation that the rest of the world hasn't seen, which is absolutely fabulous. And I think a part of that is the shift in the education models here, the incubators at universities and so on. So anything related to software as a service is still booming. Anything related to AI, I'm afraid. And I was in an event recently where there were about 30 companies presenting, and I think 29 of those 30 companies were something to do with AI. So,
would there be a saturation point at some point?
Oh, for sure. Yeah. And there's no way that all these companies are going to survive, unfortunately. But anything to do with business improvement or anything related to the infrastructure around AI is certainly getting funded. It depends different parts of the market. Here in Asia at the moment, it's tough to get funding for hardware, whereas the Valley or in Palo Alto in California, the shift is moving back to investing in hardware companies and so on. So it just depends where you are, timing and so on. It's moving around a little bit. But anything to do with software, cybersecurity is still big and continues to fragment. The biggest event in the world, the RSA event in California, recently had over 3,000 exhibitors, which is just incredible.
Just for cyber.
This is just for cyber. Yeah. And so we've always been waiting for a consolidator to come into the market to bring it together and so on. And the last company I work for here, we were attempting to do that, but without much success. And it just keeps fragmenting. So it's very difficult for clients at the moment to understand which cyber tools to adopt and use. But it is an area that continues to get funding and innovation.
Talking to Bill Padfield. And Bill, over the past 20 years or so, the story in this part of the world has been, emerging middle class. Within 6 hours of Singapore, you've got 600 million people, ex-China, et cetera, et cetera. And the growth story has been there. We look at Vietnam and we look at, Thailand has been actually done quite well. This has really been the most dynamic market as a kind of singular market anywhere in the world, and yet they're facing the headwinds of, as you mentioned, the geopolitical situation, tariffs not being the least of which. I'm hearing you be slightly bearish about being in this part of the world right now as the way that funders are looking at possible projects to give money to. Am I hearing the right thing?
Yeah. Well, okay. So there's seasonality here. So at the moment, it's tough to get funding. The innovation continues, however. It's just tough to get funding. Now, when the going gets tough, as the story goes, the tough get going. And what we're seeing is those companies are managing their runways more effectively. They're managing the cash more effectively. And they're learning disciplines that they wouldn't have learned 2 or 3 years ago when money was almost free. I've done a round. Now, just give me more money and I'll have another round. It's much harder today. So this is actually enforcing discipline. And something I learned back in the early 80s, I think it was. I was sitting on a flight from Boston to London with a group of tech people, and somebody said, you have to understand tech companies do their worst things in their best times and their best things in their worst times. And it's absolutely true, decades later. So these young companies that are learning how to operate in a lean environment now may be the future winners. So
they're not buying $1,000 Herman Miller chairs for the boardroom.
Probably not
anymore.
Probably
right?
not. No,
things we saw in California.
They're running very, very lean, and those guys are learning the disciplines that they might have learned later on, very early in the stage.
Right.
So they may become the future.
So that's a good thing.
So if I'm coming across negative, it's purely because it's just so hard to get funding. It's not a tough market. You're right. It's a young marketplace in Southeast Asia, very tech savvy. They've grown up with technology, particularly mobile technology. Now, most of the work in fact, all of the work we are involved in is in business to business rather than business to consumer. But the consumer market obviously is driving a lot of growth right now, and talent is everywhere. So there's everything right, provided the tech funding continues to flow.
But I suppose the flip side to that, and it's back to my earlier point about stability, if you're slightly cautious about Singapore and you say the funding isn't quite there, where else do they go? You've already mentioned Hong Kong is out, so where else do they go? Yeah,
well, this is where and this is my opinion, and I'm sure there's gentlemen or ladies from the venture capital world will probably have their head in their hands at the moment, but I'm sensing a geopolitical split on funding as well, in the sense that if I take money from the Western world, I am somewhat prohibited from taking money from China or wherever, and companies are having to learn very quickly and early stage as to which side of the coin are they going to go down.
Wow.
Which I didn't see a few years ago. So so there may be a lot of cash available through Hong Kong from China and so on, but companies are being very cautious because if they then want to take that to market in the US, for example, everybody dreams of selling into the US, and they realize that your investors and backers are from China, that may prohibit you from market access, particularly in the current environment. So people are being very sensitive even about the money.
Well, there's only 3.5 years to go.
So, 1 or 2 tips for success, an early stage company that's a tech company looking for funding. What should the strategy be?
Well, first of all, as I've touched on, be very clear what problem you're trying to solve. If it's just a Me Too technology that 5 other guys have done already, it's going to be tough unless you bootstrap it with your own funding. If you look at the other side of it, if you're really determined to trade out some of your equity for venture capital, then you can still get access to it. It just depends on the story that you tell, the team that you've assembled, how well you tell that story, the real narrative behind it, and have you done it before? I'm afraid, because if you're a repeat offender, you've done several startups and exits, you'll get attention immediately. But it's understanding that it comes down often to 12 slides, 20 minutes, tell your story, and there's companies that
all important pitches,
telling the story the right way. And I've seen venture capital players get up on the second or third slide on a whiteboard and start talking about how the money will work. And I've seen other companies that have got fantastic ideas, similar propositions, similar stories, and they get turned down on the third slide. And I can't see what these investors see still after only 5 years in this space. But it's an interesting sentiment. And of course, in the venture capital world, they've got to deploy cash. The LPs that write checks into that fund, they're expecting them to write checks and invest in companies, not just sit on the cash. So they're torn between, I've got to invest, but I need to be more cautious. So it just means the brakes are going on all the way through the system.
Innovation, huh? Have good innovation and present it smartly.
Yeah.
Bill Padfield, founder and chairman of Salamander Advisory. Thank you very much.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.